Pines, any thoughts on the gold revaluation?
Yeah, I guess I'd step back and say, ultimately, monetary zones are demarcated by security zones, right? And if the security zone of the global order is changing or being challenged, then you should just expect that to result in changes to the monetary zone, right? And that the provision of security is the belief by this administration, essentially, is the provision of a public good by the United States to the global economic order, and that essentially that public good has been exploited by mercantilist actors like China that essentially get a free ride on that public good. And so one way of kind of trying to rebalance global trade is essentially a way of forcing mercantilist nations to essentially pay for that global public good. And the way that we would enforce that payment is essentially by forcing those that we can coerce or induce to pay for the public good by subsidizing the provision of those security services, which requires essentially debt issuance. And so this involves forcing buyers of our debt that otherwise wouldn't, from a market perspective, purchase it at a given yield or duration. That's ultimately kind of like the conceptual framework, right? To boiling it down behind kind of what's motivating all these um, monetary and currency maneuvers between the great powers, right? And kind of this high stakes negotiation kind of reset the terms. And so each nation is then looking in their own kind of inventory of tools and assets to see what are my vulnerabilities, what are my strengths, and each nation, especially the great powers, have a different distribution of those tools. And so the United States has a certain distribution of tools in particular, right? It's like legacy incumbent status and control over global networks in various ways, including security networks, intelligence sharing networks, telecommunications networks, as well as financial networks. But it has had a kind of a, maybe a vulnerability when it comes to harder assets, right? It essentially sells financial assets to the world in exchange for paper promises. And gets consumer goods, right? Essentially, that's been a really good trade that's worked out for some elements of the U.S. political economy. But it has led to a atrophy of the defense industrial base that elements of the U.S. security establishment want to reverse in haste. So the gold is the old standby, right? Gold is kind of, or I'll always see it as kind of the risk off, flight to safety, fear trade, right? And it's seen by nations and sovereigns as a store of value going back millennia, right? And so it's kind of the default base asset of the global system, even if in the past 50 years, it's kind of been agreed upon by all the governments of the world to kind of pretend that gold is not a monetary metal. But ultimately, gold is not really useful in a 21st century economy, right? To settle complex trade between many different nations. It's inherently centralizable. It's expensive to transport. And, that's the reason why various gold standards broke down, right? Ultimately weren't sustainable. And it's subject to the same sorts of pressures. Ultimately, when you get states competing with themselves, they want to have room for maneuver. They want to borrow money, right, to finance conflicts or military expenditures, and they don't like having their hands tied with gold. So ultimately, when push comes to shove, they just sort of they rug gold basically, or they rug the gold paper market. And so we have been seeing a quite dramatic shift in global gold flows that have been of interest to U.S. intelligence community for some time now. There was a story in a Swiss magazine about a U.S. military official in Switzerland remarking upon the fact that they have noticed that overflights of U.S. and Chinese satellites using a certain type of synthetic aperture radar that's very useful to track very tiny movements in sort of subsurface sort of changes in, say, the depth of a mountaintop sort of gold vault, or trucks moving to a facility, or ships leaving a port. Both China and Russia have been acutely monitoring Switzerland. Why would they do that unless it's basically to monitor gold flows? And there's been gold flows now have been picked up in the official statistics flowing out of Switzerland into the U.S. and China in the Middle East, picking up and accelerating the last few months. Um, so that's curious. It sort of looks like folks preparing for something. The gold certificates, right, is a bit of this sort of one-time use historical accounting anachronism that is available, right, on the books of the U.S. government per the 1973 Par Value Modernization Act. That if you were to mark those to market, would essentially free up fiat reserves, right, credited from the Fed to the Treasury, roughly 800 billion, depending on the price of gold at the time that it's marked up. And those reserves could be used for a variety of different purposes, including, say, help to fund Bitcoin purchases for the Strategic Bitcoin Reserve, help provide seed capital for the Sovereign Wealth Fund, help defease existing debt by funding buybacks, which Secretary Besson has talked about, or just reduce debt issuance themselves. So you have just less issuance than the market expects at certain tenors, and that helps bring down yields. So that's a policy idea that we have proposed. It's essentially is the core mechanism behind the Bitcoin Act, introduced by Senator Lummis. But these things can be adapted depending on the strategic and political objectives you have. And so the gold certificates are kind of like a subplot in this larger strategic competitive dynamic, where ultimately it's a matter of who's got the leverage in different parts of the system. The one point I would say is, gold and monetary concerns are just one element of this competition and this dynamic that the policymakers are viewing as these different levers they could pull against each other, right? So there's no coincidence that we saw China restrict rare earth exports in response to the escalation of the tariff war. And so these are, states have the ability to escalate, horizontally as well as vertically, right? They can choose to escalate in a different domain, right? Where instead of just tariffs, you go to export controls, right? And we can do tit for tat with semiconductor controls, right? We can do tit for tat with KYC for the cloud to stop AI companies from training large language models in, say, Singapore, right? So there's a sort of full spectrum of competition that when you have the great powers of the world, specifically US and China, deciding they're going to ante up against each other to try to basically see who's going to blink, that's going to spill over into lots of different domains. And so then I think policymakers are going to increasingly look to maybe more non-traditional tools, non-traditional ideas for asymmetric advantage or resilience. And that's basically been BPI's take for a while, is seeing this competition coming, seeing the escalation of these rivalries come to the fore. It behooves the United States to take a hard and creative look at all the different tools it has on the table, and to see in different situations, where does it have unappreciated vulnerabilities and risks, and where does it have underappreciated opportunities and advantages. And I think one of those that I think we want to draw special attention to is Bitcoin, right? And so just to make this point on the statistics that Zach referenced, if you just do sort of back of the envelope math, and I think some folks that will be collaborating shortly with some data to sort of back this up with hard numbers, but I think it's a fair estimate. If you wanted to compare, say, US holdings of Bitcoin as a percentage of the total available supply and US holdings of gold as a function of the total above ground stock, I think a good estimate, rough, is roughly America probably holds 35 to 40% of all the available Bitcoin. That's been mined, and that's not been burned. Whereas we probably hold about 8 to 10% of the total above ground gold supply. And so if you're just holding everything else equal and you're just asking the basic question, if you you're going into a world where on a relative basis, neutral reserve hard assets like gold and Bitcoin are going to monetize at some pace, which one is more in the U.S. interest to see monetize, right? It's the one that we hold on a 4-to-1 ratio, right? More than the rest of the world. And then if you add in a plausible assumption that in such a monetization scenario of these harder assets, which one is going to move faster, gold or Bitcoin? I think it's pretty clear that we expect Bitcoin to move much faster and much further than gold, right? So in terms of like the strategic leverage, there's an asymmetric advantage for the United States to having Bitcoin monetized relative to gold. It could be even a 10 or 20 or even a 40-to-1 advantage in terms of the monetization kind of capital power that gets accumulated as a result of getting Bitcoin to monetize at the expense of gold, which has been accumulated and hoarded by our Eurasian rivals or middle powers for several years now. So that's kind of my like rant on that subject. And I think it's one of these ideas that is important to just put on the table, so that when the policymakers who are dealing with a lot of chaos and a lot of lots of different policy ideas and levers know exists, and that it provides them optionality along that path.
Yeah, I think there's another way of thinking about this. There's a very popular internet meme where you've got two people sitting on a bus and they're both thinking the same thing, but one person is looking out the window at a beautiful valley and the other person is looking at a rock wall because they're on a mountain trail. And it's really sort of the two sides of the same coin that you can have with regard to a state of affairs. If we go back to our friend Triffin's dilemma here, I think you can run that same thought exercise. On the what's going on here, right? Just factually, is that we've been printing metaphorical pieces of paper, and we've been sending those around the world, paper that we just create, fiat money, in exchange for goods and services from specialized economies, right? Actual manufacturing goods from China, services from all over the world, and so we've been trading sort of in some ways fake things for real things. On the one hand, if you're looking out towards the canyon, that's an incredible deal. It's allowed us to get extraordinarily wealthy, have a highly financialized economy where our money is very valuable. We get actual stuff that we didn't have to create, and then when we pay for that stuff, that money gets reinvested back into American assets, and it makes Americans that own financial assets wealthy. The looking at the Rockwall version of this is that we've specialized in creating paper out of thin air, and other countries around the world have specialized in creating actual useful things that you need to run an economy. And so we're less resilient, we're less self-sufficient, and there are all sorts of sort of vulnerabilities that system creates. I think regardless of how you look at it, and like I said before, I think how you look at it probably depends on where you sit in the economy. If you are in the Rust Belt, you probably see it one way. If you're in a big coastal elite city, you probably see it the other way. We need to figure out a bridge from here to what's next. So if you want to take the optimistic view of Triffin's dilemma, you want to keep our sort of privilege of being able to borrow and buy stuff going as long as possible. And when you start to see shakes in the system, like we're seeing right now, you need to think, all right, what is it we can do that people will keep buying our debt? Even when we've shown that maybe it's not so neutral because we can freeze it. Even when we've shown that, like, okay, we're actually accumulating so much debt that eventually we're going to need to print a bunch of money. And a hard asset like Bitcoin or gold can be helpful in that regard. If, on the other hand, you think we need to start onshoring a lot of physical capabilities and manufacturing and retool the American economy to be more resilient and self-sufficient, you need a bridge between here and there, because that can't happen overnight. You can't just snap your fingers and have factories appear and have whole industries appear out of whole cloth. And so you need to be able to finance the transition from where we are to there. And then too, hard assets like Bitcoin and gold that we can use in international trade directly, or we can use to back our debt. And maybe later we'll talk about bit bonds as sort of like a special case of this. It can be really helpful in that regard. And then if you're in this middle, we're going to outsmart Triffin's dilemma camp, same thing. This is a tool that can be used to do that. And so as between the obvious examples of Bitcoin and gold as a hard asset that can be used, I think here the fact that relatively we own a lot more of the Bitcoin than we own of the gold, that's a real check in favor of Bitcoin. The fact that Bitcoin has just begun its process of monetization, while gold has, the Lindy of thousands of years of monetary history behind it. Yeah, gold has room to go up, but probably Bitcoin has a lot more room to go up. The fact that Bitcoin is digital and can be sent basically instantly and for free across the globe, if you ever needed to call on the collateral behind debt, if we're going to use it that way, that's a big advantage in favor of Bitcoin. And so just from like forget as Bitcoiners for a second, BPI really tries to take the position, what is good for America? How can we create good Bitcoin policy for America? Bitcoin, I think, is really an indispensable tool in this regard. Basically, whatever you think of Triffin's dilemma, whatever you think of the last 50 or 80 years of American economic history, wherever we're going next, Bitcoin is a really important asset to help us get there.